OPEC, we're watching you.
Data user, we are watching out for you.
Hello, everybody. Here we have the officials bringing you a great show for today. Just as we are starting this show, prices came down below the 70s. So we have been navigating a little bit of the upper 60s, 69 something. The Ed here was saying that the lowest Brent got to was 69.77. Well, there will be a lot of bounces, but we are again in the 60s. And why is that? Well, there are a few reasons, but one of them is OPEC has been telling us that demand is growing, production is under control, members are compliant. Guess what? Everybody last week told me the data is fake. I mean, I'm so sorry to tell you, but the data is fake. And people are under so much pressure to report fake numbers. The pressure is unbelievable. Even this morning, I was talking to a bank who told me that an OPEC member calls the seniors to tell them to fire analysts that don't tell the line. I mean, this is unbelievable, right? But this is what is happening. I talked to another data provider on Friday, post-IE week, where I heard so much stuff that they were even calling his clients to tell him not to support this guy because his company is doing the right thing. Others were threatened with losing their jobs. And this is not one company. This is so many that were coming out of the woodwork. Why to us? I can only say because we are not afraid to tell the truth. Our job here is to tell it as we see it, without any pressure from anybody. And I was showing my colleagues some text messages because I also communicate with a lot of people by WhatsApp. And one of them told me to not quote him. And this is a big name in the oil industry. Of course, I'm going to respect him and not quote him, but I was surprised by that. But last week, price agencies, major news networks, consultants, all came to us to say, it's unbelievable what OPEC is doing, threatening our jobs. Some of us were in those meetings, right, Ed? And it was like, whoa, how can we believe that?
It's eye-opening, yeah.
Yeah. And then this results in faulty data used by the industry. So you cannot make the right decisions. And OPEC self-deceives because at some point, the market, regardless of the narrative, it goes back to supply and demand. And there we are again in the upper 60s. And no matter how much you write about compliance and trying to have meetings in Saudi Arabia about how to manage the press, it doesn't work, right? What do you think, Harry?
Yeah, Jorge, you raise a very important question. And I think it's important for the viewers that we specify we're talking about the famous secondary sources that OPEC employs in its monthly oil market report. So it has official submissions with very little credibility. And the purposes of secondary sources in terms of estimating production was to gain an independent view. However, there are question marks when, as we hear, some of the people who produce these estimates are then, let's say, asked to change their tune, and the narrative of the secondary sources starts matching a little bit that of the official sources. And by, I guess, extension, what happens is you lose the credibility in those numbers. Now, there are a lot of other consultants that are not part of the secondary sources that we often talk to in order to get an understanding. And we know it's imperfect. We know the data is imperfect, and it's not like it's transparent. But there are other people out there, and we watch those numbers come back to you and say, well, actually, the situation may not be as described in this report. probably is a lot different from what the printed number is, right?
And this has resulted in various people that I talk to questioning now the quality of data by the approved official sources. And in what was even more shocking for me today is a source in a major oil producing OPEC member says it's not a badge of honor to be an approved source of data, meaning the whole thing is fake. But anyway, that's what we have. We're watching out for you. We'll tell you what we hear, but we heard a lot last week and we continue to hear. But we continue to do a good job, specifically, Harry, in trying to get you some good balances that hopefully are not affected by all this fake data. And we
try our best for you. We try our best.
And we give you the right price numbers as well, because the whole thing is suddenly stinks a little, if not a lot. But anyway, besides that, what do we have? We have an oil price collapse that is not just because of fake data, it is because of a major tariff war we're having in the globe right now. A tariff war is there are no winners. All you have is greater inefficiency in the system. And while some of us may agree with some things that Trump is doing, maybe even one can theoretically agree with reciprocal tariff setting, the goal should be free markets, no tariffs coming or going, because then things get really murky. Harry just found out something that he wants to share about electricity in the northern states near Canada.
Yeah, when you think about sort of inadvertent consequences, right? Or in terms of policy making. We have Ontario looking now to tax electricity exports to the neighbor to the south. And this is going to be affecting Michigan, New York. And can you imagine imposing 25% export tariffs on your electricity to your southern neighbor? So they will be now impacted with higher energy costs as a matter of simple retaliation for the tariffs that were imposed on Canadian energy and other products. So whenever we have trade wars, as you said, it's highly inefficient. I think we both agree that the case for reciprocal tariffs is in, well, we shouldn't have tariffs at all. But if you're imposing 30% on me and I'm only imposing 10% on you, then there's an imbalance there and we should rectify that. That should proceed through normal civilized conversation, you would think, and be argued at the World Trade Organization. But unfortunately, there are these imbalances in tariff applications, which make for inefficiencies, as you pointed out.
So I was just thinking today that the world is really upside down because we have Trump trying to take away some of the sanctions against Russia while hammering the two immediate neighbors, Mexico and Canada, and also China and various others. I'm sure we're going to hear more about tariffs tonight and what is going to happen in Europe and things like that. I mean, this is going to gum up the economy, but it's a time of change. And if you like biology and geology and the history of the world, anytime that there is a major change, new species are created and the process of evolution changes. So I think we're going to have a lot of evolutionary changes in economic theory and how we all behave. Because in my conversations, which admittedly are maybe I want to say 75% with Europeans, they are dealing with a sense of loss. They are very angry with the Americans, very angry with the administration because they have lost the money. They have lost the support. They have been getting all this milk and honey for free while they pad up their own bureaucracies and don't contribute to their own self-defense. And suddenly the Trump administration is coming in and saying, you grew up. You're an adult now. You take care of yourself. And they're like, whoa, what's happening here? I know I'm a little bit on the fringe on that thought, but I don't know, Will. What do you think about that? Being a grown-up is great, isn't it?
Yeah, I mean, it's interesting because I think there's two sides of the spectrum here. Because, we've already seen Brandenburg's prime minister come out and say he would welcome the possible return of oil from Russia for the PCK refinery. So they can already see the benefits to easing sanctions in Russia, and I think it would do a lot to alleviate a lot of the industrial failures of Europe. But again, in some ways it is a big loss for Europe. It's a big sunk cost for them.
Yeah, I was having this image this morning as I was catching up with a lot of work that it's almost like throwing your son, who is a teenager, but is actually 32 and, and just wants to stay at home, getting all the benefits and have, by the way, this is not the case with me. And as you throw out this overgrown teenager, actually he is angry, will be angry with you because he gets all the benefits. But hey, it's a new world. There is no money. If the US needs to get this debt under control, and part of what they're doing with the tariffs is to pad up the income receipts because there is no money. It's one of the things we need to accept in this new environment. And the first countries that go into that process will be the better off because it's this time of evolution. But anyway, back to the oil market. So we have had some very interesting things here with everything temporarily collapsing into the 60s handle, as we call it. But there have been a lot of other things going in with Brent and Dubai and TI. So back to you, Will.
Yeah. So this morning, we had a pretty aggressive move, especially in Dubai structure. So the physical premium fell to 63 cents. That's the weakest since 29th of November. Dubai flat price is down $7 in a week. So that's a pretty big move. And a lot of this, as you say, has to do with the OPEC announcement, but there's also a big absence from the window that's becoming very obvious, and that is TOTSA. And now, without an aggressive buyer in the window, and potential resolution of conflict in Europe, and the further unwinding of OPEC cuts, the medium sour balance is looking to loosen. But I do think, here China could be the wild card. I think if we do see a dramatic recovery from China, that could stimulate demand for those kind of industrial cracks.
And there is some minor things here and there, right? And another thing that has happened is, of course, you will get around the sanctions. Yeah. And what we have been hearing is that Iran, who was subject to a lot of these shipping sanctions, is Russia, is now using smaller vessels that haven't been in any list, but China is getting their stuff, right? And they will. And they're a sovereign nation, so they need to get it. But as Will was trying to state, there is not just bad news in the market. There are some good ones. And the good ones is that China is exhibiting more strength than it has in the past. All that cash infusion is working. And I think it's also liberalizing the industry and getting more into EVs, which continue to destroy gasoline demand. But it's just technology is moving very fast. So don't lose sight of what is happening in China. And Germany, I think, is also going to do a little bit of monetary printing and borrowing and spiking the economy and getting oil from Russia or gas. But also in the latest, I was just hearing that the Russians are cutting oil into the Czech Republic. Now, the Czech Republic and Russia have had issues that go back to the more than 100 years ago when the Czech Republic, this is true, invaded Russia. So they have some old scores that they're still fighting about. But anyway, the world moves on and hopefully it becomes more peaceful. So in the economic front, what do we have, guys?
So broadly speaking, as we were discussing, China is still, there's still a lot of work to be done in China, but it's definitely looking better than it has for a long time. We've seen CGB yields rise to about 1.75%. That's China government bond yields, up from about 1.6% in China in January. Sorry. So that is the market pricing in a bit more optimism about growth prospects in China. Housing data is looking more positive. Manufacturing PMIs are also looking more positive. So there's definitely glimmers of hope there. and then moving across to.
Well, before we get into too much hope, stock markets are collapsing.
Yeah, there's the tariff effect, really, isn't it?
Yeah.
I mean, Trump comes in and says he's going ahead with these tariffs. They're enacted today, and the market tanks. Down, the US indexes were down like 2% yesterday. They've carried that on today. It's a big correction. There's a lot of money wiped out. Gold's come up a bit today and yesterday, up by about 1%, I think, on each day, more or less.
We're still calling 3,000, by the way.
Yeah, well, you are.
Yes,
So
I
yeah,
am.
it's the risk asset. And then the treasury yields on 10-year treasury yields have come down towards nearly 4.1% today. So that's a significant move. People are going to safe havens. They're getting out of their risk assets and they're moving to these safer
pretty
places.
broad-based move. And that was, I think, for me, the interesting part. Crypto also got demolished.
Yes.
Despite the announcement of a strategic crypto reserve. And I think that, when we're looking at oil and just looking at markets, you had a perfect storm shaping up between the optics quite negative of OPEC reinstating supply in a supply environment that was, already basically seeing overproduction within member countries of the producer group. We're looking at demand risks through economic and foreign policy by the U.S. Administration. And then when these two things collide, we actually get sell-offs across the board. And so the one thing that's certainly interesting for me, and I think, Jorge, you alluded to this many times, is like the man says or does what he says.
Yes.
And so yesterday's imposition of tariffs on Canada and Mexico, it's remarkable how strong the market reaction was in the U.S., right? Because
he said he was going to do it.
He said he was going to do it, right?
I think it's because he's had these quick victories before. He's had this quick, I'm going to hit you with tariffs. And then suddenly everyone backs off and lets him effectively gives him what he wants. This time, however, they haven't done that sufficiently in his view, at least. So I think maybe he was hoping for the same again. Yeah, exactly.
So I would imagine that maybe the first time around he did suspend tariffs, but all along he knew he was going to do it. That's my personal opinion. I think that all along he was set on and determined to pursue this route. So then the next question becomes, you're mentioning reciprocal tariffs, and that's a sort of Damocles hanging over the global economy. If we start doing that all over the place, how are trade flows going to look? How is activity this year going to look? And naturally, that brings us back to OPEC. And so whatever they think they're producing at, or publicizing that they're producing at, the demand side of the equation suddenly takes on a lot of importance. If you slow down the global economy through tit for tat escalation in tariffs, then whatever your balance is, it certainly is not going to get better, right? Yeah. And so at that point, of course, and one could wonder whether or not the decision to reinstate production will be suspended at one point or another this year. They said they have flexibility, judging market conditions, etc. But we'll see. But it is an important aspect, right? The demand side comes back into the picture.
But there is another good thing. If the war ends and Zelensky really got spanked, and he has been told off, he's no longer a figure, and I guess he will be changed at some point. If peace comes in, Germany can resume growing. Europe can resume growing. All the shipping lines and lanes are going to shorten. The world is going to become more efficient. So we're going to have tariffs taking strength out, but peace is going to add strength in. And if there is an equalization in tariffs, and then you go from 30 to 20 to 10, then the world is a better place. So I hope people get over their anger and then start looking at how to be more of an equal and how to essentially pay for your own defense, for your own things, rather than leaning on daddy. Because at some point, daddy gets a little old, right? I'm tired. Anyway, Harry, to conclude the program, you wanted to tell us something about your balances?
Yeah, so we were mentioning it earlier. I mean, we went through the numbers again yesterday and painstakingly went through assumptions for what OPEC may or may not do, given how much global oil demand growth we expected and how much non-OPEC supply growth was coming in. And at the end of the day, we still have a surplus of 1 million barrels a day on average for 2025. Now, I say that, and I need to caveat it by saying, actually, this build is happening off a very low inventory base. So that's a saving grace for OPEC in the sense that if you're going to be building inventories in 2025, assuming our balances are anywhere close to reality, then you bring inventories back to their average level. OPEC doesn't lose the backwardation in the curve, which is its preferred price structure, because when the curve is backwardated, there's more impact of the marginal OPEC barrel that's either added or subtracted from the market. So it's not all doom and gloom from OPEC from a price perspective, but I think from a flat price perspective, as you were indicating, we're going to be bouncing around a little bit, and we'll see if we get a close with a 60 handle on it. That would be certainly a big litmus test as to where the real balances are, right?
And if we do, we'll tell you. We told you in the officials. Until next week, thank you very much. Thank you very much, officials and watchers.